Hurricane Helene. And I want to understand how the efficient market theorists think about price, because what I think is very likely is once the hurricane hits, every major financial media outlet is going to start to run articles about the damage, and they're going to run articles about the disaster recovery efforts, and all of those things for new traders are going to start to spark the idea that, oh, I wonder if I should buy Home Depot, or if I wonder if I should buy Lowe's, I wonder if I should buy, Caterpillar, all of these different things, because that tends to be the repeated pattern of news flow off of disasters. So let me set up the premise, and then I'm gonna let you do your thing here, Tom. So what I want to say is, going into the hurricane season, starting in June, there is a National Oceanic of Atmospheric and Administration who forecasted an 85% chance of above average hurricane season. They have predicted 17 to 25 total storms, 8 to 13 of those expected to be hurricanes, 4 to 7 of those expected to be major hurricanes. So that's category 3, 4, or 5. I think Hurricane Helene is between 1 and 2, expected to make landfall at 3, and could be as strong as 4. Correct me if I'm wrong.
Yep. Yeah.
But it will be the 8th storm of the Atlantic hurricane season since June 1st. So we're in the ballpark of those estimates. The damage could be between $3 and $6 billion in private insurance losses, and $1 billion additional in flood insurance and crop insurance programs. So my question to you, Tom, is likely after this hits and when people start to see these types of articles, how should they think about trading opportunities like Home Depot and like Lowe's, who are both at and above or at or near their all-time highs right now?
I wouldn't think about that for 1 second. The dumbest thing people can do is to think that, oh my God, there's a hurricane that we're not the first people to know that there's going to be a hurricane. And for some reason, we're going to buy Home Depot stock because there's going to be a hurricane in Florida. If you do that, you should take all your money out of the stock market and just buy a treasury bill. And you should never again trade or invest.
Well, just put it in your backyard.
Or bury it in your backyard, because you are far too stupid to ever, be involved in the world of finance.
I would say far too risk adverse, but that's just me.
It's not risk adverse. I mean, that's just like anybody that thinks that way, you've missed the whole point of everything that finance is about.
I don't disagree with that at all. I think it's 100% true. There's some delta between whatever the market has priced in terms of expected damage and what the real damage will end up being. And I think that small delta becomes, it'll move markets in one way or another. But I would agree with you that the reason I set it up this way was to sort of expose the idea that people have had an understanding of what this hurricane season would be, given the warmer oceanic temperatures. That has been largely priced. And so the more interesting thing, Tom, I would ask you is this an interesting fade in your opinion? Home Depot and Lowe's, you've seen the long end rates move higher, which isn't necessarily going to give, or it has the potential to not give mortgage rates the easing that I think some people were expecting. You've also seen what this hurricane is going to make landfall. All of this, to me, sets up the potential for a contrarian move. We're at a price extreme as well. Again, so I'm asking you, you weren't ready to make the counter trend move on Chinese stocks. I wonder, as Tom and Tony, is this an interesting price extreme to take a contrarian position against, in your opinion?
Well, first of all, Home Depot and Lowe's weren't even up today. Last time I looked, they're on like unchanged or up a few pennies right now. They were down this morning.
Yeah, Home Depot's up 30 cents, nothing in this market. Right?
I mean, the market obviously doesn't believe. The market's saying that there's nothing there anyway. I don't know why, if you're going to sit here, if you can sit here and quote weather patterns to me from the changing due to climate change and everything else, then if you're interested in trading some form of weather, then you can trade weather looking out a year from now. Right? Like in other words, people knew this a year ago, and so you would have already played for it. There's no play here, is my point. Efficient market theory suggests that there is no play. It's not even a topic of conversation for me. I mean, the only thing I would care about is, do you have a trip? Like last week we were in Miami, and so we're like, are we going to get caught in hurricane season? We're like, no, we missed it by a week. Great. Do I have a trip planned to Disney in the middle of hurricane season? I don't know. I don't know why anybody. I mean, you can ask Tony why somebody would buy a house in Florida.
Let me pick at this.
Because every other day it's 80 and sunny.
So,
every day when
so
you can find your
you've
house.
often said you've advocated for the efficient market theory, but you've also said that there is a portion of the marketplace that acts as the emotion in pricing.
There is.
Um,
Yeah, sure. Of course.
so let me ask you: can somebody like me believe that inefficient market theory, but also believe that the emotion of a marketplace, or that in the short term, that the demand for some instrument has been overdone,
Of course.
and and that's what you're fading. So what
Of
I'm
course.
saying here is that the demand for things in home builders is overdone for two reasons, for two catalysts, that I believe that emotion, once this settles out, I believe that emotion will settle. And I think this is an interesting opportunity to fade. That's what I'm saying.
Yeah, I agree with you. Efficient market theory,
But
by the
you're
way.
saying there's no opportunity here.
No, no, no.
So you're
I'm saying
directionally
there's no
neutral selling
opportunity
Paul.
to think of here's how efficient market theory works. Efficient market theory just means that eventually everything gets to be fairly priced and all the information gets disseminated and everything's priced into the market. But efficient market theory doesn't mean that everything's always efficient. Like, it doesn't mean that prices are always exactly right. Prices can be emotional, prices can be order flow can change prices, emotion can change prices. There can be natural events, binary events, acts of God, all the things you're talking about that are going to have some impact on prices. They will normalize very quickly. That's why you have to take advantage of certain moves and opportunities when those things arise. But I would just caution people to not think about markets in the sense that you have to guess what's going to happen in some macro sense. Just think about markets differently. Okay, just realize that you're not alone. Again, the easiest way to think about markets, in my opinion, is for me to say to you, if I told you what was going to happen, what would you do? And I don't think that that's an easy question to answer. And that should satisfy everybody's who has this thirst or this desire to understand, the macro part of every scene. If I told you when the hurricane was going to hit 6 months ago, what would you have done differently? Would you have sold crude oil knowing it'd be down 250 today? I doubt it. You probably would have bought it. Would you know that Home Depot is going to be down $1.15 this morning? I mean, of course, with the market up, the S&P is up 30 handles. My point is, any single time that somebody has a question about, tries to bring up a macro story, a fundamental story, just say, listen, if I told you what was going to happen, how would you play it? Which is why I think what we do at Tasty is so important, because it gives you a different perspective of looking at the markets. Whereas, we can go to things that are coming up. If I told you who's going to win the election, if I told you what the Fed's going to do next time, if I told you this, that, whatever, I don't know how you would play it, even if you knew. And because of that, it should immediately take your focus onto the things that you can actually, apply, that are practical. That's the only difference. I think that's the really critical piece here.
I don't disagree. I don't disagree with you. I don't know if I've allowed a quick response, but I've never disagreed with your point of view there, Tom. I think, though, macro can, if you told me 6 months ago that the Fed was going to be cutting by the 2 year was going to drop to 350 while Fed funds rate was at 525, that the market would be anticipating lower mortgage rates and we were going to have 85% chance of above average hurricane season, then, I think there would be a case for what you would do with your money. If you told me that we were going to be in an election where the two candidates, given the structure of our economy, need to promise the people more because austerity will be painful, and though inflation is painful, it's easier to get elected handing stuff out than going through fiscal austerity. I would say on a nominal price basis, you probably want to be a stock owner. However, there's a big question mark of how the bond market is going to handle that. And I think 6 months out into the future, or 9 months out in the future, Tom, I think if AI is a real thing, I think, how are you going to power that? Because right now, the only thing that we've thought of is building data centers. And I don't think we've ever considered the material constraint or the energy constraint in powering any of that stuff if this thing actually takes hold. And I think just now the market's starting to wake up to that fact. And I think that's why you're starting to see some of these nuclear stocks start to wake up. So yeah, I agree. In a week from now, knowing what the hurricane's going to do, is that really going to change the outlook of your investing? No. But thinking 9 months ahead, which is what the market is discounting constantly, and thinking what are the conditions 9 months ahead? Does it matter for a recession today? No, because the market's discounting 9 months. And if you can get yourself out of the headlines, which are structured around today, and look to 9 months into the future, which none of the headlines are talking about, and see that world, I do think there's value in the macro construction of thinking through those types of exercises versus what are the headlines telling me and how do I trade this stuff. I think that's nonsense in the same way you do.
Okay, that's fair. I'll give you that. I'm okay with that.
I'll let you live.
That's a small win. I'm taking that.
That's fair. That's fine.
Oh my God. I think I'm done.